Good afternoon, ladies and gentlemen. Welcome to our presentation. I'm sure you've heard many talkers today talking about investment prospects, and as you know, there are no guarantees given in this. However, what I want to present to you today is a project that we think will be of interest to those, particularly those interested in natural resources. So first, we have to give a disclaimer here. Not going to dwell on that, but if you suffer from lack of sleep, then I suggest you try and read it tonight. So now Nordic Iron Ore. Nordic Iron Ore is a Swedish mining development company. We're looking to resume production at locations in Ludvika, what we call the Ludvika mines, Blötberget and Hawkesbury mine. We also have a secondary option in between the two called Westman, which we're also looking to investigate. But at the moment, we're fully focused on bringing Blötberget into production. That is the focus of everything we're doing. And the target is to make some very high quality products, some of the best in the world in iron ore. And we've done a lot of the test work to demonstrate that. So here we have a schematic of the plan of the mines. This is Blötberget mine, and this is what we're focusing on. These are for the future. Higher tonnage is up there, but that's for another day. Here we can see we have got existing infrastructure. We have the old shafts in place and some of the drifts which we can utilize, but more of that later. So, quick introduction to the company. The company is backed by more than 10,000 investors, and that we are planning to do a preferential rights issue during June. There will be a 2-week period from mid-June to the end. And then the plan is to list on First North Stockholm later in the year in August. The shareholders to date have put a lot of money and time and effort into this project to the tune of 209 million SEK. Quick introduction to the management. These two guys here are our mining engineers, our technical director Hans and Marcus, our mining engineer and project manager. There's Lennart, myself, who's here as well. He looks after the money and supports me as Deputy Managing Director. And then myself, who is originally a geologist and a processing engineer. But between us, we have a great deal of experience in starting up new mines and investigating mining options. So, why invest in Nordic Iron Ore? Well, one of the key reasons that we would look at this is we have a high grade product, so highest in the world. We can make up to over 71% iron content, which is considerably higher than the standard iron ores, around 62. There is an improving premium for iron ore products of these qualities, and demand is increasing from China and Asia and everywhere else in the world for a number of reasons. The project has low capital starting requirements compared to a greenfield site mine. This is a brownfield mine, which means there was existing mine there, and we can capitalize on the existing infrastructure and services. So we have a project with low execution risks, and more of all these later. The marketplace is very much moved into an area that suits Nordic Iron Ore. There's been the bulk iron ore is produced about 62% iron, but there's been a sort of a diversification, if you like, and the high quality ores, which are more scarce, are reaching very high premiums now, driven by demand from China in particular, to try and reduce their emissions. So there's a huge market opportunity now, and we are anticipating that investors will move back into iron ore and particularly into high quality iron ore mines. The market drivers for the increasing premiums and demand on high quality iron ore are environmental concerns and product quality, improved product quality for the steel companies. The premiums for Nordic Iron Ore's product, which we calculate will average around 69% iron. The premium for Nordic Iron Ore above that of the standard iron ores at 62% has been as high as $50 a ton. Now this is a huge premium on top and represents some 80% value on top of the standard iron. We don't see any rapid increase in supply from other competitive mines. There are very few high-grade, high-quality mines that are in development at all at the moment, although this will undoubtedly increase in the future. But iron ore mines take at least 8 years normally to come to fruition, so there will be a time lag. Just to demonstrate this increase in premium, some 2.5 years ago, you can see how tightly packed these prices are for the different ore qualities. If we move to the current times, you can see the gap has widened considerably. And these are for Iodex iron ore. This is the standard one at 62, where the bulk of the iron ore is traded. Here is the 65 Iodex. And Nordic Iron Ores would be trading somewhere up here for our standard 69 product. One key area of concern to the developers of any mines are the permits. Permits are becoming increasingly difficult to acquire, to comply with, and that is an area that we have been very successful with over the years. We've applied for our permits, and we have Ludvika, which is completely covered by its permits on environment, mining, and building. So this is ready to go now. If we had the funds to build the mine, we'd be doing it. Quick overview of the mine site and where the permits are. This is Hawkesbury Mine. This is Ludvika Mine, where we're focusing our attention. And we have the development investment in between. We have the mining concession for this small area here. And these are the two areas that we have all of our major concessions permits. This is a picture which demonstrates that there is a lot of mineralization in investment. This again, as we say, is the future, but it shows quite considerable anomalies. We've done some confirmation drilling in this area here and confirmed that the mineral anomaly there is indeed iron, and it's typical of what we anticipated. So the low capital requirements needed for starting the mine. Primarily this is because there is considerable amount of existing infrastructure underground and overground. The key thing for iron ore mines, it's a bulk heavy mineral. You need the transport and the logistics solution to get it from your mine to the customers. And we're ideally placed right next to a main Swedish railway leading to a port that was specifically designed to export iron ore. So it's a ready-made solution. It needs modernizing in some areas, but very little requirement for spending from Nordic Iron Ore. So the existing infrastructure, that gives us improved times for development. A brand new site where you have to develop everything underground would normally take at least 3 years. We're looking at something like 2 years for our development. The costs are similarly reduced. So this is a quick representation of what we expect to be. Here's the existing Swedish Rail National Network, and next to it we are running our spur here round for loading the iron ore onto the wagons to go to the port. So we have a low execution risk, a reduced development time. Previous operations on the site have proved that mining works fine there. They can transport it. They've got all the services. This is relatively low risk. All the permits are in place. The current study work that we're completing is used to define the costs of the project, and this will be finalised a little bit later, and I'll show you a timeline. So use of the existing sunken assets at the mine site help reduce the costs and the time. So an example of the economic viability of Ludvika mines. So Ludvika mines, we have calculated that we would expect to produce around 1.4 million tons of product per year on average. So the total production over the existing mine life as we have it defined is around 17 million tons. And the current latest calculation for our cash operating costs is around $50 a ton. We expect it to be under, but that's what it is at the moment. This is all subject to confirmation in the final stages of the feasibility study. So if we give the example where we would receive $80 a ton, which is very conservative today's prices, then we would have an operating margin of around $30 a ton of cash operating, which over the life of the mine would give us something in the order of a $1 billion cash position. This, we believe, is fairly conservative. In fact, the prices, as I showed on that graph earlier, are considerably higher at the moment. So this is a quick timeline for the project now. Recently, we've just hired Golder, global international mining consultants of great renown. They are in to conclude the final technical details and the costing and the economic model. We have the preferential rights issue in June, as we already mentioned, and the opening of trading during August. We expect to conclude the feasibility study in this period here. And during this time, we would expect to communicating with potential investors, financiers, and the like, and raise the funding during this period with a view to starting construction of the mine site later next year. Thank you very much for your attention.